So our moderator is somewhere on this floor, but since she's nowhere to be found, I'll take over and moderate for now. But I wanted to share with you just 2 seconds of why I think Bitcoin is pumping, because I know everybody thinks it's like a short squeeze or whatever. But if you guys think about what's happening between the U.S. and China, I just came from the China Society. I was speaking there this morning, and there's grave concern of basically this war, this political/economic war that's going to go between the U.S. and China. And for the first time, Bitcoin is acting as the safety haven, right? So people are afraid of this. It doesn't matter if you have your assets parked in dollars or in yen or yuan or in securities. All of these are going to, correlated assets are going to suffer. And it's enough that just a little bit, just few $1 billion worth of these assets are moving away to a non-correlated asset like Bitcoin for it to double, right? So that's my interpretation. I might be wrong, but we'll see what happens in the next few days. There's obviously a short squeeze on top of it, but I think that's something to think about. Anyway, we have a great panel here. We're all friends. We've all been through the winter together, right? We've been through the up market, down market, and we're going to be sharing with you our thoughts. Lucinda had the list of questions, so I don't have. We have to do this on the fly. But why don't we start with you guys introducing yourself and telling us what you do and why it's important for the crypto community.
Yeah, I can start. I'm Paul Vratitak, and I'm at Pantera Capital. I'm a partner there, and I focus on early stage investments. That means that investments in equity in companies, investments in tokens. Tokens means early stage ICOs and also late stage in terms of investing on tokens that are already on the secondary markets. With Pantera Capital, we've been around since I think close to the beginning, 2013, investing into both currencies and companies. For us, our role has been, early investors, early thought leaders, guys that have been around the space and have gone through the ups and downs, and so we don't get scared when it's a down market, and we don't get too excited when it's an up market, and we want to be just deploying capital in the space in the right areas to help the ecosystem grow.
Cool. My name is Stani Kulechov. I'm the CEO and founder of Aave. Aave is behind of the kind of like a first crypto-backed lending platform called ETHLend. And basically, it's a smart contract-based marketplace for lenders and borrowers to make over-collateralized loans. And basically, we have been on the mainnet for a couple of years now, almost 3. And it has been a pretty interesting ride, I mean, with the Bitcoin prices and everything like that. But yeah, and kind of part of the ecosystem and yeah.
Alex Mashinsky, Celsius Network. Anyone here heard about Celsius Network? All right. How many of you have wallets? Okay, so we provide a very simple service. We allow you to earn interest on your crypto. So you just take it, if you park it in Binance, or if you park it on a cold storage wallet, you don't earn anything on it. But if you put it with Celsius, you get to earn between 5 and 7% return. We have 18 different coins, and we basically lend it out. So if you think of BNB, Binance pays 20% back, right, to their BNB holders. We pay 80% back. So we take 80% of the profits from the loans that we make, and we issue that to our depositors. We just announced today we have 166 million in deposits. Well, now it's probably more because Bitcoin went up, so probably over 200 million in deposits. We've done 1.2 billion in loans in 9 months. We did an ICO in March of last year. We're one of those rare ICOs that delivered on everything we promised ahead of schedule. So we hear, I think, again, everybody on the panel here is a good actor, is someone who believes in the community. We're all working very hard to grow this community. And so what's the opportunity to unbank ourselves? How are you guys seeing this community taking over more and more assets from the other crypto from the other fiat world assets?
Yeah, so for Pantera Capital, I mean, we're investing into, what we think, infrastructure that the market needs. And so early on, we're investing into things that sort of bridge, fiat to the crypto world. How do we get cryptocurrencies? How do we secure them? How do we trade them? How do we speculate on them? And now that people are accumulating cryptocurrencies, both consumers and institutions, we want to be backing, other sorts of use cases for cryptocurrencies. And we think that staking, lending, other sorts of mechanisms like that, other sort of services on top of, the assets that you earn, make complete sense for the space and really helps bring more liquidity to the space. And so, for us, what's also helpful is that, we like to invest into businesses that, solve our own problems. Because we are a multi-strategy firm, have been accumulating Bitcoin since the beginning through our Bitcoin fund, and then have, tons of assets from our ICO fund. We have these tokens around, and we're long-term holders, so we want to be able to, protect the network, make money off the network, and so we want to evaluate partners for partnership. And then, as we've come across really good partners, guys that are trustworthy like you guys that make a lot of sense economically, then we want to invest in those players and have that partnership where we can be value-add investors. As investors, we want to, bring whatever we can in terms of our network, our assets, and we think that this is really important for the ecosystem because a lot of people right now are long-term holders of cryptocurrency, and they need a mechanism to, make some money off of that.
So you're in your third fund, I think, right? Tell us the difference between the first fund, second fund, third fund. Are you changing the focus, or are you still investing in the same type of companies?
Yeah, I think the first fund was focused on, what I mentioned, the initial infrastructure. How do we get, store, and trade Bitcoin? And now it moved over to sort of a multi-currency world. And so the second fund was around cross-border use cases and other types of, use cases around sort of identity, some enterprise. But this third fund is really focused on, infrastructure, but infrastructure that's going to be supporting other use cases around sort of decentralized finance, institutional capital coming into the space, and other use cases on top of just accumulating cryptocurrencies like lending, like staking, and then hopefully we'll be investing to more developer platforms and consumer products. And consumer products are exactly what some of you guys are doing, which is using cryptocurrencies, using blockchain technology, and being the interface to consumers where consumers really don't need to know too much about the complexities of cryptocurrencies, private keys, public keys, all of that, and really can just kind of see the benefits of the blockchain technology.
So Ethland was one of the first DeFi kind of platforms out there, right?
It was.
Tell us your story. Like, how'd you come up with the idea? When did you launch? How is the community adoption? It's just, I think it would be good to share, like, because I think a lot of people are looking at some of these new entrants and say, oh, look, a new category. And you're like, no, I've been here for 3 or 4 years doing this, So.
Well, Alex, it's an interesting story actually, because kind of the whole Ethland project started a bit of like a research. I was still a student in my college back in Helsinki, Finland, studying law, and I basically bumped into Ethereum and trying to think like what kind of things we could build on top of Ethereum, and basically we had an ICO as you guys had. The probable difference is that you were here in New York, I was in my student dorm in Finland, and basically...
It took me 30 years to become an overnight success,
I'm still on the path. So, but I think kind of the idea was to create something that is somehow non-custodial. So basically you have some sort of like a complex financial system there where you could actually gain interest. So basically you have a way to earn interest, in other way you have someone as a taker to actually take that liquidity. And kind of like building this on smart contracts, I think like we could have built the whole thing in a centralized way, but I felt that when we have this technology available, why not actually kind of like exercise it? So for us, the actual volumes were not that important, but actually kind of like the technological breakthrough. And doing in a non-custodial way was very important for us. And last year we reached 30 million lending volume without actually taking any assets as a custody. So everything's done on smart contracts. So we're very proud of that. So kind of like, even though we have been long in the space, I think there's a lot of newcomers in the market, especially in the decentralized finance space. But what we are trying to look all the time is kind of the long goal and what we could achieve. And I think the whole topic of unbanking is very important for us. So we're thinking like how we can keep ourselves as non-custodial and scale this thing. And how Ethlend is different, most of the kind of like DeFi things out there, kind of like on the beginning, is that we took the vertical approach. So we went in after the consumers instead of choosing the protocol model, which was very good kind of education for us to understand like what the user experience needs to be, so that regular crypto holders could use it. Because definitely like the problem of DeFi has been like why it's so interesting today compared to 2 years ago is because now you actually can use DeFi applications without the same kind of like a bottleneck that used to be. Even it's still difficult, but it's much easier these days.
Yeah, so let me also share with you from our perspective. So all of us are banking with whatever, Wells Fargo or JP Morgan or whatever, and we make deposits with these people every day, right? So we give the banks our money. Who here earns more than 2% from their bank? Okay, two, three, four, 5 people, right? So maybe 1% of the people figured out how to earn more than 2%. Most of us are too lazy or too distracted to put our money even in the savings account, right? Half of JP Morgan deposits, half of their 17 trillion does not earn any interest whatsoever. And that's one of the reasons why they earn 30 billion a year in profit. So the bank takes your money, you gave it to them for free, and lends it to somebody on their credit card and charges them 25%, right? The average in America is 25%. So they earn 24, 23% out of 25. They keep it themselves as a profit, introducing you to somebody else, right? And keeping 90% of the value, right? So Celsius basically said, why don't we do the opposite? Why don't we take 80% of the value and give it back to the depositor? Instead of JP Morgan gives all that money to their shareholders, gives all that money in the form of stock buybacks and dividends, why don't we take all that profit and give it back to the depositors? It's a very simple idea, and that's the opportunity. When we're talking about unbanking ourselves, it's about creating a new institution that acts in our best interest. Anyone here can raise their hand and say, your bank acts in your best interest? Even one hand? But we give them our money, all of our money, every day, all of our hard-earned money.
But Alex, one interesting thing is that if you think about a crypto space, there's also kind of a lot of bad actors. So kind of like, what do you think about kind of like putting money in exchanges or this kind of services where you put as a custody and you have kind of the default risk there as well?
So I agree with you. Look, this is the first time in history that the average person is on the next big thing before the institutions, before the banks. Like when the internet started, Goldman Sachs, they owned GS.com. How do you think they got GS.com, right? They were on the internet before we even knew there was an internet, right? Same thing with Morgan Stanley and everybody else. But this revolution is different, right? So because of that, we are building a whole new infrastructure. We're building a whole new environment from scratch without the big institutions participating. The big institutions are looking at all of us and saying, we hope you guys fail. Only if you don't fail, then we want a piece of it. Because as long as you guys fail, we can keep our franchise making 30 billion a year in profit, and every time we flip a coin and take risk, if it lands on heads, we get a giant bonus. If it lands on tails, you guys get to bail us out every 10 or 15 years, right? So that system doesn't work for us. That's what Satoshi, if you read his white paper, or her white paper, that's what she's talking about. Let's create a new system that acts in our best interest.
I agree, definitely. But I see
so we need the institutions that we all need to decide who we're giving our coins to. If we're giving our coins to people that don't understand anything about security, that don't understand anything about custody, then it's our fault. Just like when we give our money to a bank and the bank blows up, it's our fault for trusting them with our assets.
Yeah, I definitely agree. Like, I mean, basically this is a kind of like chance us to kind of hold our funds actually. Like what is my kind of concern is basically that, like, there's like a lot of, I mean, services on cryptocurrencies and for example, lending is one of them, or staking methods and staking as a service. But eventually, kind of like we're seeing that banks are coming into this world and kind of like making this new finance actually their new asset class. And what I'm trying to do in DeFi is kind of like take actually the initiative to
Well, you
let
don't need
people
the
to hold
middleman, right?
hold their keys.
You have to take out the middleman, right? The bank, the financial institution, is just a toll collector that sits between the two of us and takes the majority of the value. And they take excessive risk. That's why, again, we have to bail them out, right?
Yeah.
So,
No, I agree. I mean, you know, people are doing it two different ways. They're either becoming sort of more like a bank, or they're creating protocols that allow people to do this in a peer-to-peer manner and completely removing any sort of central intermediary. And so how do you guys feel about, you know, the model, whether it should be a bit more centralized versus decentralized?
It's an interesting question, because I think both of the models are important. I think basically what Alex is doing with kind of the custody model is basically he's bringing a lot of liquidity.
Yep.
And what we are doing in the DeFi model is basically we are providing more kind of like security and trustless. But I think without each other we can't live. So I think in a one way, actually with all three of us, we can't live. So I think what's interesting is that it's a kind of like a gateway to get more liquidity, and that's very important. But I think I kind of like believe in the idea that if you like the whole idea of blockchain and cryptocurrencies is that you actually not just get rid of the government as a kind of like central party of producing the money and the funds, but actually that you actually hold your funds. And I definitely agree that not everyone is capable of holding your keys. And if you think about past generations, and there, I think there must need to be a custody service. But I think it's kind of like different layers which work hand in hand, in my opinion.
yeah, look, you know, I've, whatever, 30, 40 years in tech, right? I wrote the original patents for voice over IP, put the wireless in the subway here in New York, many, many different projects, and they're all about taking the power away from the monopolies. The phone companies used to be monopolies, and the internet used to be an application on the phone network. Today, the phone network or the voice service is an application on the internet. So this migration, right, is a transition. It's not a leapfrog. You cannot leapfrog into decentralization. You cannot leapfrog into all the stuff we're talking about. You have to take baby steps. And the baby step involve having some centralized services with a trusted party and a lot of decentralized. So for example, the bank of the future, the unbanked version that we're talking about, is an institution, we're going to have this before the end of the year, is an institution that writes all the transactions into an immutable blockchain. So you guys give me a deposit, I issue him a loan, he pays me interest, I send the money back to you. All of that should be recorded in real time on an immutable blockchain, so everybody can audit us as an institution. And then you either build trust or you don't build trust. Try to, next time you make a deposit at JP Morgan, walk in and ask them, I want to know where my money goes. I want to know who you're lending the money to, how much leverage you're putting in it. Most banks have 10, 20, 30 to 1 leverage. Deutsche Bank 50 to 1 leverage still today, if you're depositing your money with them. Now, that's not the main ad that they have when you walk into the bank, right? It doesn't say, hey, we're 10 to 1 leverage, come give us your money, right? So, but we don't understand that. Most of us don't understand how the banks work. So Celsius created an organization where we have negative leverage. We always have more deposits than loans, right? That's the safest way to operate, right? So the reason banks don't do that is because they make much more money. They pay themselves much more in bonuses if the leverage 10 to 1. So again, the opportunity here is to reinvent what a bank is, reinvent what is a financial institution, who is a custodian, and make sure that these people act in our best interest. And that's a piece that we're not demanding as society, right? All these institutions, the government, everybody, the banks are supposed to act in our best interest, right? They're supposed to be there for us. But slowly over time, they've taken away, like plucking a chicken one feather at a time. They're just taking away all of our rights. And no one here is sitting and screaming and saying, hey, I'm not going to take this anymore. So I did that with VoIP. I helped dismantle the phone companies charging you guys thousands of dollars for international calls, and now we're taking on the banks. Like I might be arrested right when I get out of this room, but
We all might be.
So what's your vision? Again, we're this is, for me, this is war. This is not like kumbaya, let's walk down the aisle. Do you guys see that as a battle, as a royale, or is this like, or is this just a skirmish and we're all gonna find a way to work together with the banks and the financial institutions? They probably already closed my bank account, so.
I think for us, we've been investing in the space for a while. We've invested in some early platforms on exchanges and on actually, crypto lending platforms in the past. And, one of the things that happened with some of the early investments, they've gone down because of, not looking and working as deeply with regulators to try to figure out, what they can and can't do, and not having enough capital to kind of go forward and do that part of the business. So, I think on top of just all the things that you look at for these type of companies, the right team, the right product, the right strategy, the right market, I think making sure that.
So you're saying evolutionary, not revolutionary, or you're not saying
Yeah,
that?
I think there's models where you are disrupting, intermediaries and creating a different type of business model. But I think you do have to work with regulation. You have to get the right licensing. You have to really just kind of see what type of risks you can and can't take. And so we need teams and models that can actually fit with and go with the evolution.
Yeah, I agree. I mean, the whole regulation is I think in our startup, it's the biggest work now, because kind of like it's very difficult. I mean, it has been a great space for a long time, but it's kind of like the regulation itself provides certainty. And when there's more certainty, guys like Pantera can actually, they have more space to basically make decisions, and we have more space to kind of know what direction we should take upon. So I definitely think it as like, if we come back to the question, if like, are we fighting against banks? Because like, if you think about Alex, I mean, he's kind of like very spiritual, like he has a strong spirit on this kind of like fighting against the banks.
I'm rich enough to not have to worry about getting a job at JP Morgan. So that's why I'm just saying what a lot of us are thinking.
I agree. And I think what's interesting is I definitely think that what we are doing, we're doing something new, and it's kind of like, it's a way of fighting, at least for me. From DeFi perspective, I really want that everyone can do financial transactions, hold their private keys, and make sure that they understand what the smart contract can do and can't do. And this way they know what happens.
Your model does not require licenses because you're completely decentralized. But for example, our model, we are FinCEN registered, we filed a Reg D with the SEC. We went to every state and understood what the laws are. And we were actually surprised, I didn't even know that, but most states in the United States allow you to issue loans as long as you are below the usury rate.
Yeah.
So the states encourage people like us to come and lend out at low rates. We lend at 9%. That's our highest rate, is 9%. You can get as low as 5% loan. Anyone here can just walk in, no credit check, no income verification, get a loan for 5%? Not a single person. Because we got used to the fact that the banks take whatever, 4 weeks, and they require 600 pieces of paper. And I mean, it's just a nightmare, right? And it shouldn't be that way. We just accepted that because the number of banks in the United States decreased by 3,000 over the last 30 years. And the 5 largest banks now own more than half of all the assets. So that concentration is because we allowed that to happen, right? I mean, basically, so back to your question, I mean, I don't think it's a regulatory issue. You can do it without any, as a DeFi, or you can do it with full regulatory compliance, as we're doing. The issue is, what are you doing? Are you creating something for the user? Again, the great example is the most successful company in VoIP, right? WhatsApp. Anyone here uses WhatsApp? How much money do they charge you? Did you get a bill from them saying 0, right? So how can we go from $3 a minute to free, $3 a minute to free, and all of us are benefiting from it and no one is getting hurt? Well, the phone company's got hurt. Well, can we do the same thing with money? Can we go from VoIP to MOIP, to money over IP? And the answer is yes. So
Yeah.
we can do it this way, we can do it this way, right? I mean, the question now is which solution is going to really take hold and become the killer app for decentralization, because I don't believe that there's going to be 2,000 winners, right?
Yeah.
On the internet, there's 5 guys that won
Yeah.
basically after 25 years. So
I think for each certain model, decentralization or centralization, you know, there's like as you mentioned me, I think there's a world where both kind of fit in. But just like how it looks like in sort of traditional finance, I mean, you're going to have, you know, a set of winners, and you're going to have a set of winners on this side. I think the use cases are a bit different. I think, you know, guys like yourselves, I mean, really just, you know, quick liquidity, you know, smaller size loans. I think it works great for decentralized applications, being able to kind of work with each other. I think for you guys, I mean, I could see much larger sized loans, institutions getting involved, people, you know, using it to buy a house, things like that. So I think the target demographic, the use case is different, and I think there's a world where both of you guys can succeed. I think the path to getting there is slightly different. I think for you guys have to work with the states, FinCEN, and all of that, and you guys, really it's just about getting widespread adoption, maybe finding different ways of getting more yield on your business model, because you guys are decentralized, you guys aren't taking as many fees.
Well, so
Yeah.
what we've done also is really exported the low rates in the United States. So basically we took the low cost of capital here, put it on a blockchain and said to anyone on the planet, hey, as long as you have an asset you can give us as collateral, Bitcoin, Ethereum, Litecoin, whatever, we will give you dollars or stable coin at a 5, 7, 9% rate, right? Which you can't access that in China, you cannot access that in India, you cannot access that in Africa, right? So suddenly, this low interest rate that is available in the US, and the fact that half of the credit on the planet is issued here in this country, is available to everybody on the planet, right? So it's
Yeah.
it is decentralization, right? Same thing with interest income, right? Interest income is everybody on the planet. There isn't a person on the planet that doesn't want more income on their money.
But Alex,
So you can take
Yeah.
now, for the first time, you can take your dollars or yen or euros, convert them into stable coin, deposit them in an app that works on your phone,
Yeah.
and you're earning 7%, right? So,
The
so
global
these are
liquidity
things,
is
these are
important.
things that didn't exist before. So the reason, like, again, we went over $1 billion in loans in 9 months because people were like, oh gosh, this is much easier than the bank or than my gray market or whatever, and they basically adopted this overnight, right?
But for example, we require collateral. So I think kind of like comparing the basic secured loans and unsecured loans is.
We only
is
do
of course-
secured loans.
Exactly, and that's my point. Basically, if you do secured loans, we can grant like lower interest. But for example, if you would grant basic unsecured, that's a completely different game. And I think like if you look at the DeFi sector now and basically the lending platforms, we ask for collateral because the previous models that were before us weren't doing that, and basically they failed. And I think the kind of like unsecured lending model isn't here, but I'm not saying that that the whole lending space or the DeFi space will be always like this for the next 20 years, that basically every time you want a loan on a blockchain or cryptocurrency loan, you always need an asset. I mean, we're doing a lot of research on Etland, basically, how we could actually manage to give unsecured loans as well and make those transactions very possible. I mean, in a way that you have a global liquidity market, but still that basically there's underwriters and also that those loans could be enforced in case of default. But I think like interesting question. I mean, if you think about DeFi, I mean, sure, definitely I agree that the loan size, I mean, ticket size is very small. I mean, we have loans from $1,000 to $5,000 US dollar worth of stable coins or Ethereum. But I think in a one way, for example, we can see now that the stability fee on DAI has raised to 20%.
Yeah.
Basically, we have a lot of kind of like onboarding going with a bigger tickets, basically blockchain startups that had raised a lot of capital. And I think the ticket size might go somewhere to 50,000. It's not the same that we have in OTC, where basically we have a lender, a borrower, for example, as Alex, who, I mean, Alex's customer who might be, for example, hedge fund, and they want like a ticket size for 2 to 5 million, for example. But I think
Well, we
I
lend
think DeFi can
coins.
scale
We
to
lend
that.
coins to hedge funds. We lend dollars to retail. So, but let's open this up to questions. There's a mic there. We want to, in the spirit of consensus, we want to hear what you guys have to say. What do you want us to answer? And you can ask us anything about anything.
I just had a question. That 7% return sounds really, really big, and you know, it's usually like risk and reward. And is there any risk to giving you like my Bitcoins and get a 7% return? Because that's like equal to the S&P 500. You know, it seems, and the S&P 500 has volatility and all that.
Yeah. So there's risk to waking up in the morning, right? I mean, risk is all around us. And we use a custodian called BitGo, which is a famous company. They're very good at what they do. They have insurance with Lloyd's and so on. And we lend out coins to hedge funds who pay us 9%, 10%. We give 80% back. So basically, anyone who borrows from us gives us collateral. We lend dollars. Anyone who borrows dollars from us gives us 2 times collateral, meaning we have much less leverage than any bank. And because of that, it's a much safer source of income, right? So basically, you know, you can give your money to a bank, you can put your money in the S&P, but you're not going to get that 7% yield. So we basically do what financial institutions do. We just give most of it back to the depositors, right? Our charter, our reason for existence, is to act in the best interest of our depositors. We don't represent the hedge funds. We don't represent the borrower, right? Your bank is in the middle. They don't represent you, and they don't represent the other side, right? They represent themselves, trying to make as much money for themselves. We can sit here with a straight eye and tell you that we always represent the depositor's best interest. Any other questions? Just use the mic because we're not going to hear you.
What are your perspectives on challenger banks? How do they fit with all of this?
Well, not to be controversial, but so I'll repeat the question. What's my perspective on Challenger Bank, or our perspective? And not to be controversial, but in 30 years of fintech, not a single company, you cannot point to a single company and say, these guys disrupted the banks. These guys even caused a scratch on the banks, right? So the banks are bigger, more powerful, more profitable than ever before. So traditional fintech, where you just grind at what they already do, it hasn't worked out. We haven't been able to disrupt the banking infrastructure, or the monopolies, or the fact that they're charging us too much and giving us too little. So the opportunity, the reason I'm so excited about decentralization, and specifically cryptocurrencies, is because this is the vehicle, this is the platform. Just like the internet was for the phone companies, it disrupted, completely eliminated what used to be the travel business, or what used to be the phone company. This is what crypto is going to do to the financial institutions. What do you guys think? What's your view?
Well, you know what? I'm not that scared about the challenger banks, and kind of like, I'm bullish on them a lot because they're very advanced compared and kind of innovative to traditional basic finance and banks, but I'm more scared about Google and Facebook, because I think those could be the banks of the future. I mean, Facebook, they do have, for example, electronic money license in Europe already. They're issuing their stable coin. Google is doing a lot already, and I think those guys are much, much more powerful. And depending on the challenger bank and the innovation, I would say that definitely I think those are more maybe kind of like interested into implementing blockchain technology, cryptocurrencies, compared to the traditional finance. But I think the big tech companies are more bigger players and will play even bigger kind of role in the banking in the future, I think.
Yeah, I agree too. I mean, especially with the news from Facebook recently, I think distribution is key, or is a huge asset. So guys that already have a bunch of users, guys that have a lot of information on users can easily do KYC. So once you partner identity with also a user base and potential wallet behind that, I think that sort of can become a
But
bigger
it comes down to trust, right?
Yeah,
I mean,
trust.
the question is, who we going to trust?
Yeah.
And again, this revolution is all about not trusting the traditional guys. So, but we have to bring the next 100 million people into this revolution. Otherwise, if all of us are just talking to each other and sending coins to each other, we're not going to get anywhere. Next question.
All of the lending now is collateralized lending, so basically margin lending, lending to people who already have assets. What do you see as promising examples of uncollateralized lending. So question is for Aave, but I hope Alex and Paul can pick it up.
You go first.
Uncollateralized, yeah.
Actually, very interesting question. Like, in terms of uncollateralized, that's something that we have researched for a year or so. I think I would say that if we could uncollateralize something which is basically based on, for example, debt or receivables, and make it based a bit of under-collateralize or a bit of over-collateralize. And I think that's the model in DeFi that we are looking into basically scale into unsecured loans. But in credit-based loan, I think once we have the kind of user data, user amounts, we know how people repay, we have some kind of linking to the profile of the user, then we basically can establish credit ratings. And also, if we know enough of these people, then we can actually enforce them in case of non-compliance of the repayments of the loans. So I think the uncollateralized loans are coming, and I think guys like, for example, us, I mean, it doesn't matter whether the service is centralized or decentralized. I mean, we, at some point, some data we want to pick up if we want to create this uncollateralized lending business model. But we're capable of providing such model, and I think it's coming for the next couple of years, definitely.
Well, you're from Finland, right?
Yeah.
So in Finland, they have an uncollateralized lending, and I think the loss factor is less than 2%.
I think
So as an example, right? So you know, JP Morgan loss factor is on their credit card 6.5%. So the uncollateralized model actually works better than the credit card model, because with the credit card model, they ran out of customers, so they issuing credit even to non-credit worthy people. And part of what I found out, I was looking deeply into this issue, and you know, like 20 years ago, I forgot the name of the guy. He got a Nobel Prize for doing microloans in India, and again, he proved that giving $10 to people that have nothing had a 98% return rate. 98% of these people came back and
Mohammed
paid.
Yunus, yeah.
Sorry?
Mohammed Yunus from Moon Bank, right?
Yes, yes,
Yep.
exactly. So, and now there's thousands of companies like that. I mean, we're trying to partner with these companies. We're not going to reinvent the wheel. We're going to be the source of capital funding these things. But on the taxi on the way here, I was in a taxi with one of the people from Bitrue who's doing unsecured loans in Indonesia. And we want to partner on going into that market. We already have a partnership in Vietnam and in Singapore and so on. So these are opportunities that I think, again, 90-something% of the people in the world are good people. So what you have to, it's the 5% of the bad people that cause 50% of the damage.
Or unfortunate. Sometimes it's
Or unfortunate, which is
yeah.
fine. You know,
Yeah.
like that's 1%, right? So it's that 5% of the bad people, and that's part of what we've done also with Celsius. We have very strict KYC/ML because we're trying to make sure we don't allow bad actors into the system. People come to me and complain all the time. It's so hard to get into your platform. Like, yes, for a reason. You know, like, you know, we're trying to make sure that we only give access to good actors. So, next question.
Hi, I've just been told that you guys are like 25 minutes past the time allocated, but I'm going to squeeze in my two-part question. One to Pantera and then one to the panelists. How does Pantera look at the current trend and the very big bullish sentiment on STOs? That's one. Two, for collateral, how does lending platforms look at collateralizing security tokens?
Yeah, with STOs, I mean, we've invested into a company called Harbor, which sort of is our first, you know, sort of entry point into STOs. I think, you know, you need to have good supply before you have good demand. And so you bet on a team that can find that supply, build the technology, and do it the right way in terms of, you know, sort of making it regulatory compliant. And then from there, hopefully we'll see a lot more liquidity. I think that's kind of what we're waiting for right now, is to actually see some of these projects go out there and sort of prove the use case out that, you know, this is going to cut costs, this is going to bring global liquidity, et cetera. So we've made one investment into that space, and, you know, I think going forward, we're likely going to invest into more platforms that will bring more supply, and then eventually, you know, we may invest directly into specific STOs. But I think right now we're still kind of looking at the infrastructure and trying to wait and see how it evolves and kind of see how the use case plays out.
What was the question? About collaterals.
Security tokens.
Oh, okay.
Yeah.
Yeah. So basically, I think in the process of collateralization, I think it's kind of like a business of maybe not us. I mean, definitely like our idea is that we have a protocol. So what we are doing now basically in Atlant is we're creating a decentralized lending pools, which are open source. So anyone can create their own lending pool and basically choose the assets that they accept. So basically one of these could be security tokens as well, if that particular business model exists in certain jurisdictions. But I think the tokenization itself is something that we are not it's not our bread and butter, but our butter is basically to make sure that we have a marketplace or protocol where people actually can initiate in this kind of loan transactions.
Well, looks like we ran out of time, right? I want to thank everybody for coming in.